Okay, cool. Let's get it started. Okay, well, welcome everyone to this premium webinar by FX Street. Thanks FX Street for having me again. This is my second one, and I'm thrilled to be here. Yeah, today we're going to talk about supply and demand, which is an area of focus I'm studying for since about 2010. Yeah, as you may have heard, I'm currently in Bali. We took my family here for 2 months, and we're going home on Thursday night, which is a bit of a blow. But here's the other day, took this picture, kind of looking out to the Indian Ocean, and it's just absolutely staggering. Such an enormous, powerful sea. Really made me feel insignificant, but grateful at the same time that I can kind of be here and share this experience. Standing in front of the sea here is absolutely staggering. So, but it all ends tomorrow. Right, very briefly, who I am. I'm a computer guy, actually. I studied computer science and majored in IT security, computer hacking, and I was really into the hacking scene. And I thought, well, I better find a job, otherwise I'll end up in jail. And I found a job, and which is great because then this enabled me to work with what I really love to do. And who needs security more than anyone? It's the banks. And so for the past 15 years, I've been working with IT security, doing security audits of banking software, and it can be almost anything, but typically it's like FX terminals for the traders, some of the like liquidity distribution stuff, and of course FIX protocols, so access to the FIX API for a given financial institution. And this is really cool because I actually spend a lot of time with traders on a daily basis when I'm performing these assessments, so it gives me a lot of time to speak with them. And I got into currency trading back in 2010 when I started Pipnotic, and I've been developing currency trading software since then. And my focus is supply and demand and currency strength. And my software is and my education is used for funds. I have a couple of funds as customers, and I also have like a bunch of retail traders, and I operate exclusively for the time being, via Pipnotic and the Coach's Corner at Forex Mentor. Okay, so the agenda for today is spotting imbalances in supply and demand. And this is really important for our success as traders, because if you can't spot a valid price imbalance, then you'll probably be entering at the wrong places on a price chart. So we're going to look at defining, locating, and qualifying price imbalances. We're going to talk about parents and children, and this is the terminology that I've chosen to use because, I mean, the reason I've used parents and children is because this just tells us there's a relationship between the two. And so we are going to use this terminology to create questions that we ask, and this asking of questions enables us to focus, or helps us focus on the real supply and demand, and not the reactions to supply and demand. We're going to get into detail in this in just a minute. Then we're going to look at kind of a last point here, and this is what is currently driving price, because a lot of people are looking at a price chart and they ask themselves, okay, should I buy or should I sell? And so there are a few things that you can do, one of which we'll talk about later on, that can help you answer this question, because then you know that if you should be buying or selling. Okay, so spotting imbalances in supply and demand. What is an imbalance, first of all? Well, if you have an imbalance in anything, this would lead one to believe that if something can be out of balance, then it can also be in balance. And so I talk a lot about price imbalances and price being at parity or disparity. And so I like to ask the question when I look at a price chart, for example, is price at parity for a current move, or is it not? And this helps us, again, figure out if we should be buying or selling. And so how can we spot price imbalances on a price chart? There are some very clear methods and tools that you can use to help you identify these imbalances, because these are essential, of course, for our success as traders. Answer this question: are they all wearing the same T-shirt? Yes, they are, and they're all torn. What does this mean? Well, this means that we want to see really strong areas of price imbalance, which is the same as a disagreement in supply and demand on a price chart. You don't want to enter a trade in an area where there is an extended period of agreement between supply and demand. You want to see disagreement. And so you'll want to spot areas of supply and demand, which I refer to as accumulation in my material, that is very clear, and also where this period of accumulation, supply and demand, has happened for a very limited amount of time. You don't want to see, for example, if you're looking at the hourly chart, you don't want to see 10 hours of accumulation. This is not something you want to see. You want to see maybe 1, 2, or 3 periods of accumulation, and then a release in price. And this release meaning a retreat to a price imbalance. But we're going to look at this on a price chart shortly. And of course, you want to see strong pushes away from areas of accumulation. And this is very important because this is pretty much the telltale about if prices are, if there is an agreement or a disagreement in supply and demand. How many people in the room here trade supply and demand? Is this like, how many people here like use supply and demand as their primary method of trading or methodology? Just to get an idea where we are. So Adam is doing it. Excellent. Okay. Good. Okay, brilliant. Okay, so spotting imbalances in supply and demand. Well, price can do anything, and it will do anything. But I mean, I'm not an economist. I have no intentions on being an economist, so I don't want to have to analyze the political situation, the geopolitical situation in a country, because that's not what I do. I can't do that. I don't have the experience to be able to do that. But what I can do is I can look at a price chart, and I can teach myself how to read the specific patterns on a price chart that will enable me to make better trading decisions. So if we have a quick look here, you can see that we have a bar up. I left the wicks out just to avoid me spending too much time on the slide. So price goes up, it goes up again. This is great. We have a big push, maybe tiny wicks to the upside and the downside here. And then price stalls here. We have rejection. Oops, come on. Come on, you blasted. Okay, there we are. We have another push higher, attempt higher. And we have a really big move lower. So what does this tell us? Does this show us that price? Okay, I can see here. Sorry, questions. Let me see. Okay, cool. Okay, super. Thank you. Good. So price will move away. So it will come up to an area and then it'll retreat very quickly. So here we have 1 period, 2 periods of accumulation. And if you're unfamiliar with the term accumulation, please check out the last webinar from last month where I go into this in great detail. But accumulation is simply an accumulation of filled orders at a given level. So price moves higher, price moves up and down. And this what I refer to as accumulation has specific price pattern. And so I refer to it as accumulation because we have the buy side and the sell side. We are on the buy side. We are buying liquidity for our broker. You have the sell side, which is a broker. So the broker is selling liquidity to us. And so due to the fact that we're on the buy side, I focus on the terminology there. So we have accumulation here, price rallies. We have 2 periods of accumulation. So we fill orders. What kind of orders? Short orders. So you don't have to stand here and say, okay, you don't have to try and guess. Is price going to move lower or higher? You wait till price shows you. Then you know that, okay, price left very aggressively. What does that mean? That means that this is bearish accumulation, which means that when price comes back up here next time, you want to be selling just around here. We have a look at another example. Price sells off very quickly. We have a really strong push lower. We have a pause. Price moves up, it moves down, it moves up again. And it moves away like that. What does this mean? Well, this means here that we have 1, 2, 3 periods of accumulation. So we are accumulating, we are filling orders at this level. Are they bearish orders or bullish orders? Well, we only know this once price retreats from the area of accumulation. In this case, we have bearish accumulation. But this, of course, could be kind of a V, and this could be a rally, accumulation, a rally for a move higher there. So this is what it's going to look like on a price chart. And this you can consider a continuation pattern, and this is simply going to be some kind of a top. Okay. So defining, locating, qualifying a price imbalance. We want to defining a price imbalance. Price reaches a level of let's say accumulation, and if price on that, it's easier if I show you on a price chart. So if we have a look at this, so price, you can see right now price is currently out of balance. Why out of balance? Why do I say this? Well, you can see that when price formed this daily area of supply, price rallied, we accumulated for one period, and it sold off. And so when price left here, until price feeds back into these areas of accumulation, it is imbalanced. It is a disparity. And only when price returns to it is price again rebalanced. And so when price is out of balance, we form a bottom here. Price is naturally going to gravitate higher because the thick liquidity is up here. And this little price imbalance here, this is thin liquidity. And so all the buying down here at the bottom are going to be able to consume the liquidity between, for example, this area and this area easier than when compared to this up here. Here we have a thicket of liquidity just up here, and this is selling, so bearish liquidity, which is ultimately limit orders to sell. Okay, cool, Mike. Good. Thanks for your comment. So price leaves, it moves back up here. So price is it's an imbalance, and then it returns back here. And when it does that, then it's rebalanced. You can see now price is imbalanced. For price to be rebalanced, it should move back to here. So price moves back to here. It leaves here, it's out of balance. When it comes back down here, it would have been rebalanced. And this is great to us. Why? Because here we have an area of accumulation. So price rallied up into this area of supply. We saw rejection. We saw 2 periods of accumulation. Then we saw a really strong push lower like that. And so this is nice because this push lower is in the direction of this price imbalance. So price will likely gravitate down here to this area, somewhere around this base, at least to this red dotted line here. And when this happens, then price is going to, technically speaking, be rebalanced. And this is nice because when price comes up here and we have a nice area of supply, selling and pushing price on its way back to being rebalanced down here at the base. Okay, I hope that was clear. And so again, we want to see strong areas leaving an area of accumulation. Is this a strong release? It is. It's a nice strong release. Is this one? It really is. This is a nice one because when price reached this area, we had only one period of accumulation, and this goes back to what I said about the period of accumulation. Here we only had one period. Ideally, you don't want to see more than 3 or 4 or 5 periods max of accumulation. So if price rallied and accumulated for 4 periods and then sold off, that's also okay. But if price rallies and you have 10 or 15 periods of accumulation, that means that there's an agreement in supply and demand. And this is not what you want. You want only to focus on the areas where there is an imbalance and a disagreement in supply and demand. Is this agreement? Absolutely not. This is disagreement. Are we buying? Absolutely not. We're selling. We don't agree with your buying. We agree with we're selling here. And so it goes against this move. This is great. This is very nice. So price move lower here. We had a tremendous move lower. We had 1, 2, 3, 4, 5 bars, so 5 days of trading when leaving this area of accumulation before price even had a breather. And even after the breather, it continued moving lower. Okay, and when price left here, we had this area of accumulation, like a small continuation pattern. Price left again for 2 periods, and when it returned roughly to the lows, this is where we saw the reaction. So we had a thicket of liquidity, this area here, more or less. Sorry, I'm going to move this over here. And price tested roughly the lows, and then it was rejected and moved lower. And so we had some limit orders to sell here. Price touched those, and we saw enormous rejection and price move lower. Okay, so you want to see the strong move away from the area of accumulation. Then you have the structure of accumulation. What does that mean? Well, when I refer to the structure of accumulation, I'm referring to how price leaves a given area. Sorry, my screen went bananas there. How price accumulates. So you have an area like this. This is a lovely structure of accumulation. If we move this here, you can see that we have accumulation bar. We have a nice candle with a decent body size here. Only one, and then it left. What you don't want to see is you don't want to see anything like this here. You can see here that price came down. We accumulated for a long period of time. We had these really, really big wicks, both to the upside and to the downtime. What is this trading doing? What is this trading low and higher and lower higher doing? It is consuming, it's using the liquidity available at the level. So on the next approach, price is likely going to feed deeper towards the bottom of these wicks. And so this is not what you want to see. You don't want to see extended periods of accumulation like this. You want to see short periods of accumulation and sharp moves away from the area. Yeah, and again here, the length of the period of accumulation. Here we had one period, 1 day. That's great. When you have this here, this is efficient trading here. But there's a lot of agreement here. You can see how price rallied. We accumulated, we moved back down here, we moved up, we moved down. So price is balanced here, and there's a lot of agreement at this area just here. The disagreement in supply and demand, or the imbalance in supply and demand, it becomes visual and very relevant when you can see the release here, price left here. What I don't like here is the wick here. This wick here tells me that I want to go on a smaller time frame to find out what's going on, because within this wick, you're going to see other areas of micro supply and demand and accumulation that is actually where price is going to react. You can see when on this strong push away from the area, price reacted to somewhere in the wick, so somewhere in here. So in here, there's likely a continuation pattern, which is where the real area of demand for this daily accumulation candle is located. And this is what caused price to move higher. Or that's where the big orders were located to buy at that level. Okay, and then I refer to this parent and child stuff. What does that mean? Well, we have a parent and we have a child, and the question is this a parent or a child enables you to figure out if an area of supply demand is real supply and demand or a reaction to real supply and demand. And so it helps us differentiate between fresh supply and demand and reactions to them. And this is super, super important, because a lot of people who are looking at a price chart, trading supply and demand, they'll look at an area and it'll have a really nice release. Let's have another look at the price chart. So price it'll leave very quickly here. But is this demand? No, it's not. It's not demand. This is a child, the parent being in here, somewhere in here. And so this will help you focus on what the important areas of supply and demand are. So if you look at this here, you can see that we have this top here, this nice area of supply. And you can also see that the high here is roughly the same high as this one over here. So if you look left, historically, there's probably going to be an area of supply. Let's see if we can find it. I'll mark that off. Now we're going to scroll back and see. We'll change the color so we can find it. So if we go like that, and you can see, yes, here you can see that those two child supplies are a reaction to this here. This is fresh, untested supply. We had a test lower. Price came, we accumulated on the area here, so we had actually a horizontal trend line break. Then this area of supply pushed lower. Price reacted at roughly the wicks just here. So this is the parent, and these two are children. Does that mean that the children don't work? No, it doesn't, but they have to be qualified. You have to properly qualify these areas of child supply and demand. But I'm always asking myself the question, do we have child supply and demand, or do we have parent supply and demand? So if we look at this, for example, you can see here that this looks like a pretty decent area of demand. Are we going to see a reaction there? Very likely. But the real area of demand is the one down here. But if you look at this one, you can say, well, actually, this is not the real one. The real one is here. But actually, this isn't. The real one is down here. And you can see that just here, this is the one that was fresh until it got tested once. But there was so much buying here that this is where we saw the reaction to the next time. And after that, we saw additional buying at this area here. So these are all linked together. So we have the younger brother, younger sibling, older, this being the parent just here. And so asking yourself these questions is just simply a nice way to help you focus on the real areas. If we look at this one here, is this an area of supply? Yes, it is. Why? Because it's not reacting to anything else. And this is important because this area of supply consumed opposing demand, the opposing demand being this one here. And so this is the one that saw the reaction on the approach on the next time. Okay. And so asking these questions just helps you really kind of keep your head straight, because sometimes it can get very confusing when you have so many areas all over the place. So you want to be able to differentiate between real, fresh, untested supply and demand and reactions to that supply and demand, which is pretty much just price coming down to the real area, filling the orders down there, and then pushing price higher. Okay. But it doesn't mean, as I mentioned earlier, you can't trade these areas of children's supply and demand. But I have these questions that I ask. I say, okay, if I find an area that I like, I ask, is it apparent? If it is, this is good, then I can trade it. If it is not, then I go to this step 2, and this will help me ask some additional questions. And then if it isn't, how did price react the last time it reached the area? Because if price left very aggressively, then you know that there's an awful lot of buying and interest in buying the asset, the given asset at that level. So if there's a big reaction there, then you can consider buying it. But you might not want to consider buying or selling at a given area, a child, if there is like a bunch of previous tests. You want to see the first one is ideal, the second one can work if the test is shows great rejection. But the third and fourth or the third and following are normally, it's not generally a good idea to do something like that. And so if you see this one here like a small rejection, then you want to leave it alone. And there was a nice area on the Kiwi that I was trading here. I was trading for a while. Yes, so we had this area of demand here. I like this one. And I traded a couple of times. I traded on the first time back, and I also traded on this one here. And the reason I took this one here is because the previous one, which is the second one, when price tested here, you can see we had a huge rejection here. You see how price, this candle, where are we? When this candle came down, we had a lot of rejection there. What does that tell us? That tells us there's an awful lot of buying at that level. So do you want to buy here at the child? No, you don't. So you come down here and you say, okay, is this a parent or a child? This is a child. Okay, where's the parent? Here's the parent. Okay, we got 2 rejections previously. The previous rejection was really big. We had a huge pin bar, price moved away. So it was okay to take this trade the next time. But what you don't want to see is stuff like this, for example. So you have this area, this small continuation pattern. Price forms this top, we sell off, we accumulate, we sell off. You can see how price manages to come back up into the area very, very quickly. So you're going to want to sell this on the next approach. You don't, you really don't. The first approach worked out okay, but it was a very poor quality trade. And the second or the following test just went through the area and completely consumed the area of supply, ultimately resulting in price moving deeper and to the edge of this accumulation bar prior to the release. And so you want to make sure the rejections are enormous, really, really strong, ideally at least 2 bars away, sometimes 3 bars away. This is rubbish. This is nice. This is very nice. And you can see here that price finally moved through this area of demand, which means you don't want to test it. You don't want to trade it on the next approach. Doing so, you can see here price just cut through it like that. And so this is gone. which area of supply did it. It's this one here. Is this a parent or a child? This is a child. The parent is where? The parent is here. So we have this one here. So price didn't really do anything there. It cut through it. It was a second time back. The first test was okay. And then price fed into this one here, which is kind of the point of origin for the entire move lower. And this is where we saw the major test. Okay. Okay, good. Let's have a look. So these are the questions I like to ask myself. They really keep my my head straight, and they also teach us to be patient, because if price is coming to a child, then you can say, okay, this is a child. I could take it. I'd have to manage the trade more aggressively, or do I want a more of a laid back, relaxed trade? Then you go for the parent. Okay. Here are a couple examples of trades that went wrong, and there's a lot of interesting information in these losers. I like to look at losers that I receive from my users, and also my own users. And this is a really nice example where we had this area. This is on, I'm not sure what time. This is I think the half an hour chart, because this is gray. So price rallied. We accumulated. We actually have a small continuation pattern here, a rally, accumulation, rally, accumulation, rally. When price left, it tested the highest accumulation, and then it moved higher. And then price came down here, and we had rejection. So assuming that price is up here, and you have your eye on this, you can see the price accumulated. We had a pretty decent move away. You put your order in to buy there, like this person did. Before you do that, you ask yourself, is this a parent or a child? Well, you look left. This is actually a child, the parent being this one here. So this is nothing more than the filling of orders. This is a reaction to the real demand, which is down here. So there's no demand in here. This isn't demand. This is merely a reaction to the parent demand, which is down here. Price came back to here. We had a small reaction, because there obviously is a little bit of buying here. But there wasn't enough bullish liquidity to support price. Price fed into this area of demand, which is the one where we saw the major move, or major. This is a half an hour chart. And price release, we moved higher. We reacted to this area of supply, which is a continuation pattern. A sell-off, accumulation, sell-off, spiked into here. We saw a reaction here, and price slowly drifted higher. This is the second test on this one. We managed to hold it. And then we saw a major push lower. So again, this is this child, and this is the parent. So it's a really good exercise in asking this question. Let's have a look at another one. We have this one here, which is the parent. This is the child. So price left. You think, oh wow, price left very nicely. There was a lot of speed in that move away. The accumulation is here. So most people would think, okay, I want to trade this. I want to sell this accumulation, because this is where all these lows got taken out. But again, you ask yourself the question, is this a parent or is this a child? It's actually a child, and the parent is the one just above here. And also, we spoke about the period of accumulation. How long does price accumulate? Did price accumulate before it released? You can see here we had an awful lot of accumulation for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 25 hours of accumulation here before price finally left. What does that tell us? Is supply and demand in agreement or disagreement? It's an agreement. So price left, and when it came back, this person sold into here. We got a small reaction, but the reaction occurred when price came back to the parent, which is just at the top here. And then price spiked up into there. We saw some accumulation, which is fine. Price started to sell off, and then we had a big sharp move lower. So I'm just looking at the comments to make sure there's nothing I'm missing. Okay, here we have another one. This is pretty similar to the one we just saw, where we had the parent here. We had the child. This is actually a really messy one, because we have a lot of nested children within one another here. So we have this sell-off here, and then price accumulated. We sold off. So it looked like supply until we saw this and this. Then this kind of voids this. This is not valid supply. Price comes back up, feeds into the area, into the highs here, and then price slowly drifts lower. But there's no commitment. There's no green candle leaving the area. The first one comes just here. So this person said, "Oh, great, we have a green candle. Time to sell at the point of origin of this move lower here." So price came up to here. Is this a parent or a child? This is a child. Why? Because this is it's first of all, it's a really, really ugly area of accumulation. It's extended. There's an awful lot of agreement in supply and demand there. And the real area of supply is just at the top here. And my software tells me as well that this orange line, we have weekly supply and we have daily supply nested on top of one another. And so here this is a blue. The blue color tells me that this is on the 4-hour chart. So we actually have this area of 4-hour supply is nested in a daily area of supply, which is in turn nested in a weekly area of supply. And so this is simply drilling down to the smaller time frames to refine the entry. So price cut through this. So price cut through this area, went to the parent, and this is where we saw the bigger reaction. And so this was about 2 or 3 to 1 had the stop been just above this high here. So about 2 or 3 times bigger than this move, maybe 2 times bigger. So that was a decent trade there. Okay, good. Do we have any questions about any of this stuff that I'm rambling on about, or is everything nice and clear? Is everything clear? Okay, good. Okay, and then there's the notion of asking yourself this question, what is currently driving price? You look at a price chart, you want to know, okay, should I be buying or should I be selling? If you have a little bit of insight into the fundamentals, that's great. Then you know on a fundamental level, on a macro level, what it is that's driving price. It could be interest rate swaps. It could be the price of milk in New Zealand has gone up, which is good for the New Zealand dollar. And so things are really cruising politically for a given economy. But if you don't know that, then you have to look at a price chart and answer this question. So if we just pick a random pair, let's pick the EuroCAD just for fun. Okay, so we see this. And we're on the 1-hour chart, let's say, and you say, okay, should we be buying or should we be selling? Well, you look at this and you say, wow, price is moving higher, I should actually be buying. Yes, and on the hourly chart, that's correct, you should be buying. But before you do that, you should be going on the higher time frames, and I like to refer to sometimes the monthly, but always the weekly. We'll go on the monthly and have a closer look. You can see here actually that price is doing this on the monthly chart. So what is price doing? Well, you can see actually that price is reacting on this. So we had a move away from this area of accumulation, and then I asked myself the question: okay, the candle before, is this an accumulation candle? Yes, it is. Is the area, the body of this candle within the range of the previous? No, it is not. So this enables me to draw an area of demand that looks something like that. And so what we have here, this is simply a continuation pattern. So we had accumulation, and then price managed to move above these highs of accumulation. So we actually have another area of demand nested just above that. So I'm going to mark that off from here to here. Maybe the software is not. Okay, there it is. Okay, so price came down to this area here, and this is where we saw the reaction. Now price is retreating from this area of monthly demand. What does that mean? Well, that means that monthly demand is currently driving price. So do you want to be buying or selling? Well, you definitely want to be buying. So this is also, if you consider the fundamentals, if you're looking at the weekly or the monthly chart, the fundamental data is generally priced in. So you can see that this is being bought for the time being. Does it mean it's going to go on forever? Of course not. But it does mean for the medium to short term, that you want to be buying this currency pair. If we have a look at the weekly, we can see the same thing going on. We have a few different areas around here. I'm just going to mark off the Matter of fact, I'm going to leave that how it is. But you can see, I'll just delete the bottom one because we're reacting to this one here. So this is a monthly area of demand that the price is reacting on, and we're moving away. And when price reacted here, how did it leave? Did it leave aggressively, or did it kind of hang around a little bit and not really move anywhere? Well, it left very quickly. We see we came down, we poked into the area, which is actually the second time back, and price left very quickly. And we're actually in the process of establishing a continuation pattern. It's not a continuation pattern yet, but it might be if price manages to move away and hold above this area of demand. And what does that tell us? Well, that tells us that we have potential demand here. And so we could consider to buy here if price moves away and higher. So what do you want to be doing? You want to be buying again. Go to the daily chart and you find your entries, and you can see all of these other areas of I'm just checking the comments. These other areas of demand here as well. We have another one here. I'll just delete that one, and we'll put this daily area here. Like this. We're going to take the highs because that's where we saw the reaction in price. Cool. And you see this one and you think, oh wow, here we have an area of demand. So we'll mark that off. And you ask yourself that ever important question, is it a parent or is this a child? It is actually a child. The parent is the one just below here. So this is where the demand is. This is a reaction to this demand. This is simply orders being filled and moving higher. We have a continuation pattern happening here. We didn't really have a nice move higher. So I wouldn't consider trading this because price did not leave like it did from this area of demand. It kind of accumulated, and that's it. We had not a whole lot of a commitment and follow through here. Price accumulated for 1, 2, 3, 4, 5, 6 days. And then we finally saw price move higher. So unless price really moves away and holds away, I'm not going to buy here. I'm going to wait until price comes down here, or alternatively down here, because this is fresh. This has been tested once before. And so this is super important. So what I like to do is I like to go on the higher time frames and work my way down. If we have a quick look, let's take another pair. Let's take the Aussie. Now I'm just going to drag this over and apply the template. So we have this on the monthly chart. What's going on? We can see that we're reacting to something down here. We have this down here. Is this demand? No, this is demand. And this is what price is reacting on. Like that. So price reacted on that. This is simply a reaction to that, filling of prices. We had a really sharp move lower, price moved higher. And now we're reacting on the chart, which is down in here somewhere. So if we have a quick look, you can see that price rally. We have a green candle showing some commitment. We have a pretty decent move away here. Another one here. Here we have the older sibling, the younger sibling here. So this is one at the bottom. Price reacted to this candle here. This is where we're, come on, muck around. There it is. This is where we saw the reaction here on this candle here. So price is currently reacting to this. But you can see when price did that, it didn't really do anything. We had a pretty decent push higher. But this at the time, fresh supply, was untested. But now you can see the price is really testing it and really kind of thinning this out. And so the next area of fresh supply here is here. So you can assume that price is going to maybe gravitate higher, move up here. But until this one's taken out, you just want to be a little bit careful. So you want to be buying at the lows and anticipating that price is going to move back up here. And again, we ask ourselves the question, is price in balance or out of balance? Well, this price imbalance, price was at this parity, out of balance, and it returned to parity here. So this is actually in balance. And so now on the leg down to rebalance this price imbalance, we have another imbalance. So for this area of supply, price is not rebalanced until it reaches the 86.42-ish area. When it does, then price would have rebalanced as price imbalance. And then we expect price to continue rebalancing until it returns back to parity. So we have another push away here. So price, after it rebalances this, it'll probably cause a price imbalance here, and price will want to come back rebalance before it continues up to here. And then it's a constant struggle between supply and demand, balance and imbalance, that moves price like this. Okay, there's a question in here. Okay. Conchalo is asking, what if you have two parents at a short distance from each other? Which one do you choose? Well, that's a really good question. If you have, let's see if we can find an example like that. Let me see if I can find one. Okay, I'll just draw it. Let's see if I can draw annotation drawing. Okay. Okay, cool. I can draw. Okay, let's assume that we have price moving up, we accumulate, and we move down. So this is the all-time high. This is a parent. That's a little bit fat. Let me thin. Anyway, I'll leave it. I don't want to spend too much time on that. And then price comes up a little bit. We establish something, and then we move lower. So technically speaking, unless this is reacting to this, these are both parents. So we have a high here, this is a parent, and this is also a parent, because this one, unless it's kind of fed into this one, is not going to cause this to be a child. But what I found is that if they are very close to each other like this, price will often, we'll mark this one off, return to the higher one like this before it continues lower or figures out what it's going to do. So when I have two areas like this on top of each other or very close to each other, I always take the one that is furthest away from price. This has a lot to do with stop placement as well, because if price is moving up here, we have rejection, we have another one, and then price moves away. If price comes back here, yes, we will have rebalanced this price imbalance, but price is still out of balance. Why? Because it has to come back up to this area of accumulation to rebalance that. And so you can put your stop above here and your entry here, and price will potentially feed into that and respect that and maybe move lower. But the stop is kind of in no man's land here. So I like to put my stop here, sorry, my entry here and my stop above here where we have the black space. Okay, let me, okay, and so, actually let me draw again because this is pretty important. Okay, if you have a, this is kind of off topic, but it's important. If you have a high, so price, we have a price that's high like that, and then it comes down. Okay. Actually, no. This is liquidity. This is liquidity curve. Price is here. Price is here, roughly here, and this is liquidity. A high like this will correspond to, for me, a high in a price chart like that. So this corresponds to that. This is liquidity. And so the peak of liquidity is located around the peak in price, because you know that if price has to move through this, it's going to have to consume enormous liquidity and able to continue higher. So what price will often do, it'll move into here, and then that is sufficient to cap price, and then price will be rejected, and then selling will begin to occur. So what you want to do is you want to place your stop on the other side of this this big area where you know there are a lot of institutions going to be selling. So this gives you protection for your stop. We have this. This is not a lot of protection. So if this was a stop here, I mean, yeah, there's not a lot of protection. If you put it up here, where we have a lot of black space, then you know that there's a lot of protection for the stop there. And so, Conchal, I will always go for the more conservative area furthest away from price. And this is actually a webinar, a topic, material for a webinar by itself, because this is really, really interesting. And when I've spoken to some of these institutional traders, there's especially one bank that I spend a lot of time doing security work for, and I know a lot of the algo guys, and they talk a lot about liquidity distribution and it's unbelievably fascinating. And having insight into how the institutions distribute liquidity and what it means, and the buying and selling, it gives you a huge edge when you do that. Instead of looking at indicators and focusing on the retail side, if you focus on the sell side of the market, it really light bulbs go off. I just say that light bulbs really go off. Okay, super. Let's go here. So yeah, so that's what I like to. I like to focus on. I like to be able to answer the question: what is currently driving the price? And doing a top-down analysis will certainly enable us to do that. And a long time ago, in the coach's corner, price was moving up like this. Price was flying higher like that. And I wanted to sell at that area. And why did I want to sell that area? Because of this. We had this fresh demand, supply at the top right there. And we were calling this price we called this in we're speaking about this in coach's corner a long time ago. Price was racing higher, and a lot of people were looking for a place to sell because you could see that price was reacting to this. But we had this area here of supply that had been tested once. It was tested twice, but when price reached this area, it reached there on the smaller time frames. It was accumulating. So price was. Let me draw this one as well. Price reached an area, so we have an area here. Price reached the area, and then it started to accumulate. And that makes me nervous. If I'm looking to sell here, and I see this price accumulating just below my level, I'll often pull the trade. Why? Because you want to see rejections. What does this mean? This means that there's an agreement in supply and demand, which you don't want to see. You want to see this. You don't want to see this. This is not good, and this is good. And so when price came up and touched this, and we saw this rejection, as soon as that happened, what does that tell us? That means that we have monthly supply driving price, so we want to be selling. We want to be selling our pants off. And then you can see here to the downside, you ask yourself, okay, we have this area of demand here, price moved higher, and this area of demand moved through and consumed this area of supply. And I like to ask myself, what is the point of origin for this move? Where did this one originate from? And it originated from down here. And we have an accumulation candle down here, which my software told me about, just like here. So this is where you want to look to ensure that you're out of the trade, or at least reducing your risk. And if you're focusing on the longer term, the macro, it changes everything. It really changes everything. I know it's very interesting and fascinating to be on the smaller time frames, and there's a lot of action going on, but you'll make the majority of your money when you take the trades on the daily and the weekly and the monthly than you will fighting on the smaller time frames. Well, I feel more comfortable doing that at least. And so when price comes back down here, you don't want to be selling. You really don't want to be selling. Why? Because you'll be selling into monthly demand, which is whopping. There's huge thickets of liquidity here, billions just waiting to buy, to hold price at this level here. Price came down here. When you see this stop and price moves away, what do you want to be doing? You want to be buying dips, because you know that the majority of the big money is long the dollar and short the CAD when it gets down to this area here. Okay, cool. Okay, so some conclusions. Understanding that the parent-child relationship will bring your eye to the real areas of supply and demand, and it'll remove your focus from the reactions to them, because this is super important. And the levels that you see, they should jump out at you. And I've programmed this really cool software that I think it's called. It really helps me eyeball where these imbalances are happening, and it gives you an enormous advantage. You can see here, you get accumulation, price move high, accumulating. You don't want to be trading any of this. It's just messy when you see them all. You want to see these really nice candles moving away from the area. This is where the action is. Good. And then we have, you want to focus on these really big imbalances. As I mentioned, I've said it 1,000 times in the past, you want to see a place where there is a very, very clear disagreement. This is agreement. This is disagreement. You can see the price gapped up here. We had a small gap here. This is a weekly gap. This is nice. And so this is what you want to see and what you want to focus on. Using the Pipnotic software, you simply focus on the accumulation candles, and then you want to see at least one candle leaving the area. Ideally, you want to see 2 or more. So if you have this one here, this is the example we showed earlier, price rallied, we accumulated for one period, short period of agreement, which is great, green candle, this is more or less a green candle, accumulation, green candle. So price accumulated away from this area of supply, and there was absolutely no one was buying the American dollar, Canadian dollar here. We're accumulating price to do what? To move lower. So when you saw this green candle when you saw this green candle moving, that says, yeah, we want to be shorting when price gets up here. Then you don't load the boat, but it's just important to know that when price gets back up here, there's going to be enormous amount of selling going on. So you want to see they should jump out at you. And again, knowing what is driving price on the higher time frame. If you're looking at moving averages or whatever, you're not really paying attention to what is most important. You want to be seeing what is going on. And I don't pay a whole lot of attention to fundamental data, but I do very often go to Bloomberg /markets/currencies, and I read the analysis that are put out there. So I know fundamentally what's driving the Kiwi, what's driving the pound, which currency should I be pairing. This is just a really, really nice and important thing to do. I'm not like an economist. I have no interest in economy or anything like that, or macro economy, but it's super important to know what's going on. And by not doing so, you're putting yourself slightly more at risk. I also focus a lot on currency strength, which enables me to see stuff like, I just put it on here, like this. Give it a minute to load. Has to do a lot of number crunching. But I look at the currency strength of these currencies, so I map the individual currencies against each other, so I always know what's being sold, what's being bought. You can see here we have the pound, this is on the half an hour chart. So we had an increase in buying of the British pound. Why? Go to Bloomberg, you'll know. The reason is because the Bank of England was hinting at interest rate hikes like in I think it was 2018. So this is interest rates are going to attract flows because this gives a better yields on your investment. But this is shorter term. The bigger thing in focus at the moment is the Brexit. We have the chapter 50 on the 29th, I believe, and that is hugely uncertain. No one knows what's going to happen. And what does that make you do? That makes you pull your money out of the British pound and wait until the storm is blown over, because there's a lot of fireworks waiting just around the corner. So you have to be a little bit mindful of that. Currency strength shows you this information as well. You can see the Japanese yen is particularly strong today. This is the half an hour chart, the 1 hour, 4 hour, daily, weekly, and monthly. And so this just gives us like a really nice insight into what's going on. And so I position myself directional based on what I can see here, and I enter using supply and demand. So this is fundamentals, I suppose you could say, and this is technical. So the direction of your trade is fundamental, your entry is technical, or for me it is at least. Okay, good. Well, that's all I had to say. I hope it was interesting. Does anyone have any questions before we wrap things up? Yesterday I went over, last session I went over, and I didn't want to do that this time, so I kind of tried to keep things short and sweet. Let me see if there's any questions in the Q&A. Nothing. Good. Good. Anything at all? Well, Conchalo, I don't know what the weather's like in Barcelona, but here the sun is shining. It's unbelievable. We have a nice steady 30 degrees every day. It's absolutely gorgeous. So we're looking forward to it. And on Friday I'll be back in Copenhagen. I think we have about maybe 5 degrees or 4 degrees. So that's a bit of a blow. Hey, you're very, very welcome, Mohammed. It's a great pleasure. Yeah. Oh, good, Nick. I'm pleased you find it useful. It's funny, the way I learned currency trading is actually, it's a spin-off from software development. So I was writing tools, and I wasn't interested in trading. Staring at price charts all day while programming software, doing so for so many years, I don't know, really allowed things to seep in. So it's kind of my understanding of supply and demand is a spin-off from currency strength. Sorry, from software development, which is really cool, which is nice because I had no emotional attachment to anything. I just wanted to understand price, or rather, write great trading software. So it's a really good way to study price and how price moves. Good. Yeah. Thanks, Conchalo. Thanks, Adam. Cool. All right. Well, if there are no more questions, I'll hand it over to FX Street. And again, FX Street and Conchalo, thanks so much for having me. I really enjoy doing these. They're a lot of fun.